Hello, this is Andrew from Trend Following Mentor. During the day, I talk to many investors, people, money managers, and a lot of people have a question is, when can I be in the stock market? When's it safe to be in the stock market? And actually, I have a very simple rule, and I want to share with another major rule. My simple rule is, if you're above a 200-day moving average, which is pretty simple, you go to any, let's say, charting website and put up a 200 period exponential moving average. If you're above it, you should be okay. If you close below it, you don't really want to be long in the stock market. The question comes is when it gets into a little bit of a choppy period, which it is now. Since June, it's just been chopping over and over around, plus or minus the 200-day moving average. And an idea that you might want to do is you want to look at weekly bars. If you close above a weekly bar, above the 200-day moving average, you can be long. You close below it on a weekly basis, you don't want to be in the stock market or short. A fascinating issue that I want to discuss also, which happens so rarely but is so important, is called the death cross. What you do is you look at a monthly chart and you do basically a 50-period moving average and a 200-day moving average. When the 50-month moving average crosses above the 200-day moving average, it's a very positive sign. That actually happened in 1982. Prior to 1982, the stock market was in pretty much a secular bear market from the mid-1960s. Secular market means, bear market means no one was making money. It was just a very negative period. The same analogy is if you can take a look at the Japanese Nikkei. In 1988, the 50-month moving average crossed below the 200-day moving average on a monthly basis. And the Japanese stock market was at 39,000 in 1989. And today we're at 8 or 9,000 after all of these years. The point I want to make is we're very close to having the 50-month moving average cross below the 200-day moving average on a monthly basis. That's an extremely negative sign. Very negative. I want to share that with you, my listeners, my readers. Again, this is Andrew from TrendFollowingMentor.com. I invite you, I have a book coming out with Wiley Books in the fall called The Bible of Trend Following, How Professional Traders Manage Money and compound money and manage the risks. Again, what I do is I teach you how to trade everything that I've learned over the last 18 years. And I'll tell you humbly, I've made every mistake possible. And from my mistakes, you can lessen your learning curve and learn what it takes to be consistent and what has a propensity over time to compound money. And this is really what the key is. This isn't hitting, crazy returns. What I teach you to do is return reasonable returns. A reasonable return is 15%. It's amazing. When you compound that over long periods of time, and you have the time to compound it, it creates wealth. And this is what I teach you. It's not just for you, it's for your children. I've taught my children since they've been 12 and 13 years old how to trade and how to think as a trader. And to me, it's a way of giving back. If I can help you learn to become a better trader, please contact me. My name is Andrew Abraham, TrendFollowingMentor.com. Thank you.